Hello, everyone, and welcome to our Spotlight On series designed to showcase some of Innovate Finance's most exciting early stage fintech members and highlight emerging trends across the fintech ecosystem. Today, we're joined by Kartik Dabbiru, CEO and founder, Complystream, and Manos, Schizas, head of regulatory intelligence at RegGenome. So quick introductions of the company. Complystream is an AI-native compliance, decisioning, and orchestration platform built for B2B payment services providers and fintechs. Thank you, Kartik, for joining us today. And we're also joined by Manos. RegGenome is a regulatory data technology company and a leader in the field of computational regulation, changing how the world produces and consumes regulatory information. As a regulatory data provider, RegGenome processes the world's regulation using AI to transform what is human readable into a machine readable and machine consumable data. Thank you, Manos, for joining us today. To kickstart the conversation with, let's look a little bit on the RegTech landscape in 2026. And I'm going to start with you, Kartik. So what do you think are the top two major shifts in the RegTech industry today that firms cannot afford to ignore?
Joshita, first off, thank you so much for having me. Speaking from a financial crime operations lens, there are two key trends. One is that of shifting from a orchestration or a coordination lens, but to a decisioning lens. So AI is essentially becoming fast the judgment layer, where you will have systems that have opinions and not just an input and output, which is what we have been seeing thus far, especially with the SaaS revolution. So that is the number one shift we are seeing, where every analyst, a human analyst or agent decision can be tracked, can be recorded, can be explained, but also fed back into the model to make the model even more sharper, even more refined to help the same businesses that it is working with. The second thing that we are seeing is that of unification. I think we are well on our journey where businesses used to integrate with every point solution, one for identity verification, the others for KYB, etc. Businesses do not want to do all of that heavy lifting only for them to not get the outcomes that they wanted. So we are now seeing a unified layer that can be readily deployed for these payments institutions and for these large banks, which then gives them the ability to control these workflows and ultimately bring in these decisioning agents that can work across the stack to give these outcomes at scale. So those, according to me, from a purely regulatory tech and from a financial crime operations point of view, are the big shifts we are seeing.
It's very interesting and exciting to see the space use a lot more of AI. And touching on that, Manos, I have something for you next. So how is the increasing use of AI and data-driven systems reshaping both the RegTech intelligence piece and also compliance execution?
So I guess, that the answer to this question also goes back to this idea of key trends. And you won't be surprised, on our end, we and our partners are also absorbing the changes that came from the impact of Gen AI and absorbing that. And I think to the average person, if you look at things like chatbots, etc., it's easy to miss that most of what this technology is being used on is to actually change operationally how firms ingest information, process information, and manage tasks. I guess if I just focus on two things. In the early days of the RegTech sector, there was a lot of talk around what it would look like when it's matured, and you would see academics papers talking about like a single front end to compliance or a single front end to regulatory rulebooks. And of course, that never happened, but now with things like MCP interfaces, we're getting to a point where people have at least a front-end protocol, and they can all build things that can talk to each other. So that's a really big change we're seeing. And I think the other one has to do with the rebalancing, if you will, of competencies between firms and vendors. I think I'll come back to that point later on, depending on the questions we ask. But for a long time in this industry, you had RegTechs, at vendors, they were better at building information structures that scaled, that they were sometimes better at organizing and running machine learning tasks and content pipelines. So the task was, building on that specialism and mapping the content they could provide or the actions or the artifacts they could provide to the internal world of the firm. And I think where we're getting to right now is a situation where actually a lot of the skill set has moved into firms. They have a much better understanding of their own information structures. They obviously have a lot more engineers and a lot more data scientists than the average vendor can bring to bear. And really the idea is to get to a place where you offer them tools that they can't build in-house, as well as kind of reliable data that they can use as a source of truth. So I'll pause here so that we don't kind of go into a lot of the other questions perhaps you want to ask, but that's one place to start.
Yeah, thank you, Manos. That was very insightful. And also, now that we've talked about the landscape, I think it'll be useful for us to also look at the sort of challenges and also opportunities that you're seeing in the space. So, Kartik, can I pick your brain on this one? Where do companies that you're seeing are struggling the most when it comes to operational compliance, particularly in sort of managing alerts, investigations, and workflows?
Before we get into challenges, I want to paint a little bit of a scenario. If you put yourself into the shoes of a day-to-day financial crime analyst who are either working in the first line of defense or perhaps in the second lines of defense, their jobs is extremely high pressure and extremely stressful, especially because they're trying to meet two vectors at the same time. One is making sure that the business is protected from bad actors entering the financial or the payment systems. Number two, they're also looking at how do we make sure that the business is growing, because ultimately compliance is a business function. So that is where the challenges that they face then comes across three different streams. One is access to data, or specifically the documents that are being sourced from either the underlying regulated parties or from the customers themselves. And what happens is these processes are extremely manual and clunky and repetitive in nature. So much so that you have analysts who are chasing customers on emails or on Slack or on Telegram. So whilst you have communication channels that have upgraded, you still have the scenario where you're at the mercy of the customer to source these documents. And sometimes customers get extremely upset because they want their account opened very quickly, or they want their payment resolved extremely quickly. So this is where you turn the analysts from doing investigation to them becoming coordinators, almost like a project management office function where they're chasing. Second, you have detection platforms have become extremely enhanced, and they are like doing this at scale. But what's happened is you then flood the systems with these false positives. And in my 10, 15 years of working, you're in this situation where 95% of the alerts that come up, or even more, are false positive. And what happens, the financial crime analyst effectively becomes like a person who's just literally clicking OK on 95% of the cases. They're discounting it. The other 5% of the cases, they need to investigate it, but they don't have the right tooling, the right data to make those decisions. Number three is where you are making decisions, human-led decisions, but you have a human at the end of the day trying to stitch together multiple different systems. One for KYB, one for identity verification, the other for, detecting these alerts. And they have to stitch together how they arrived at their decision, because at the end of the day, if a regulator comes knocking, they will ask you, how did you come to this decision? And then there is a mad scramble within the company by the second line of defense, looking at all the email trail or the Slack communication or what was discussed in a CRM somewhere, to then bring together how you explain the decision. So those to me are the three big operational challenges. One is the coordination problem with documents. The other are false positives or alerts just flooding the system. And number three is really explaining how you arrived at a decision.
I think that's very interesting to see it from that perspective, and you've really laid down the three things. And building on that sort of operational piece as well, Manos, where do you see firms struggle most in terms of interpreting, operationalizing regulatory change across multiple jurisdictions?
So first of all, it's great that we first had a perspective from Kartik from essentially what happens within the firm, because the perspective we come to this kind of question with is from the point of view of the regulatory content flowing out of regulators. And so the question there is, what is regulatory change operationally? What kind of thing is it that you have to do? And so from working like with vendors and with regulators, the first thing that is quite problematic is actually getting to a proper definition of regulatory change as a set of granular events. If you're doing things like horizon scanning, change may be one new document, but for most use cases in compliance, that's not what change is, right? Could be a particular obligation going through different versions. It could be very different things. And so the question is, what is a unique event here? And how can we trace the same unique event through its life cycle across the business? Now, this is something the industry has been working on for like more than a decade, and we're not 100% there yet. Not, I think, on the vendor side, and not on the but the capabilities are there. Certainly, we use them to version, to identify, to organize into clusters. It's just difficult getting that all together into one kind of event timeline. So that's number one. I think the second thing is, once you've captured events, the issue that firms have always grappled with is how can you map deeply at the level that matters to your internal functions, to your policies, to your roles, to your controls, and also how you deduplicate all of these kind of new events across the organization. And that's really quite difficult. So the early days, we thought it was sufficient to just label things and say, well, this is relevant to this policy, this is relevant to this role. And I'm not saying this doesn't add value, it definitely does. But the point is that doesn't immediately read out to what the impact is. So that is one of the things that people really spend a lot of time and money on, because that's where all of your internal chains of accountability come from. That's where you actually conceptualize change. And then the problem that anyone who deals with content has is, how do you demonstrate completeness and provide confidence? And that's not just on the vendor side. It's obviously also primarily on the side of the firm actually doing the complying. So, do you need to get a law firm in at enormous cost to actually provide a certain level of assurance? Or are you going to ask a vendor to take on liability in case you've missed this one thing that you could find yourself liable for? So that's one of the things that firms and vendors, and even people like ourselves, do a lot of work on to kind of achieve the right level of comfort. And finally, and we've already started talking about agents, and so conceptualizing and building those for some areas of compliance is still a new discipline. So, if you're looking at areas like reporting, they have a long tradition of RPA, of robotic process automation that they can draw on. But other types of requirements, more conduct-based, for instance, it's actually quite hard to conceptualize how arrays of agents should work together. We can give more concrete examples later on, but that's something we see people grappling with at the moment in areas like financial promotions, for example. So that's a big area of work on monitoring and capturing change.
Thank you, Manos. I think we touched on the opportunities and sort of challenges that you're seeing, but I think it's also interesting to know more about the bridging piece where you bridge intelligence and execution. So to the both of you, what is the biggest disconnect today between regulatory intelligence and operational compliance that you're seeing, and how do you think it can be closed?
One of the gaps that we are seeing is you have the second line of defense that is looking at the policy changes and then trying to convert them into the procedures that need to be then applied by the first line of defense. And the issue that creates a lot of anxiety for the MLROs or the heads of compliance is determining on a case-by-case basis and an overall level as well, are our procedures generally adhering to the policies that we have to abide by as a regulated institution. But more often than not, what happens is you will have situations where teams and also agents, AI agents, will deviate from those paths of exactly what this procedure was set out, or you will have to take exception scenarios. And especially financial crime and compliance, there is never a straight line. You will always have nuances. And I think Manos already pointed this out around the jurisdictional complexity that also exists. That how do you make sure that what is okay in jurisdiction A is absolutely strictly prohibited in jurisdiction B? And then you have to bring in the risk appetite of that particular firm. And mapping all of that, I don't believe is easy from a manual or a human point of view. And that's where I think Manos and teams at RegGenome exist to make this a lot more easier. So what I believe is the switch between the policy change to the procedure, and then implementing that control at execution stage is bringing in agent-tech workflows that are doing two things at scale. One is adopting how these procedures can actually be implemented as a configuration. And that configuration, especially with Gen AI, allows you to map out millions of possible scenarios, as opposed to forcing a human to come up with maybe thousands of scenarios and then still missing out those scenarios. Number two, the agentic workflow should not just learn and adapt what is being given as a procedure, but also start to have opinions. For example, we might set out in the procedure based on a policy saying that this particular payment, if it is, let's say, above a certain threshold, always stop and question it. But say for argument's sake, you have an analyst that is constantly like, this payment is getting stopped, but they're literally sending it away. They're approving it in the very next second. So is it a case where the analyst is actually missing something, or is it a case that it is not actually okay to stop that payment, and it is not that risky to evaluate that payment, stop it, and then question it? So that is where we need agentic workflows that are then going back into the procedures and questioning those procedures, and those procedures then ultimately impacting the policy that was set out. So that's kind of where I think the gap can be bridged. Manos, I want to quickly pass it to you.
I very much enjoy how I think our answers will ultimately resolve to the same thing, but because you come from a very different world in terms of the problems you're trying to solve, I think they will sound a little bit different. So if we talk about the disconnect, right, between understanding regulation and acting on regulation, this is a disconnect we've always had. It will always be with us. And it comes down to a very simple thing. Firms do not directly comply with the law or the rules. They comply with policies, they implement processes, they maintain systems and controls. That's what compliance looks like in terms of what actionably happens. And so the law, the rules, they're not going to tell you everything that you need to do to manage compliance risk. Whenever people talk about things like machine executable regulation, my colleagues and I kind of roll our eyes, because you really cannot get lawmakers and regulators to take on the liability of minutely prescribing everything you need to do. Because they don't know the circumstances, all of the circumstances in which something will apply, the internal structure of the firm, the specific products, the specific features of a transaction. And so it's down to the firm there to infer what compliance looks like in terms of controls, in terms of policies, in terms of all the way down to individual data points you must store or report or whatever. So you have this idea where regulators write for legal certainty for your legal department. And that's not the same thing as operational certainty for your business analysts or your data architects who are actually deciding what compliance looks like in your world. If all you have to work with are NLP-based tools and agents powered by small language models, large language models, you're stuck with not being able to easily infer policies and controls directly from the source material, with the exception of few cases where the regulator has seen appropriate to minutely describe it. And the way people close the gap is essentially by doing that deep kind of analysis work, right? Of saying, here's how the rules map to everything that compliance moves within the organizations to policies, to controls, to systems, to individual roles. And whenever you do that, you take on a certain degree of risk, and someone has to do it. So either the regulator takes a risk and sets out minute instructions, and then if things don't work out well, it's their fault. Or you take a risk as a firm and you say, this is going to be my interpretation. You know, the industry kind of works together in pockets and creates kind of consensus around mini standards of here's how we do this. Maybe get a little bit of a nod from regulators that, you know, yeah, this is probably okay. This is a lower risk situation. And that's how people normally do this. And we haven't yet come up with the silver bullet to these things. You'll never get regulation that executes itself end to end. And so that risk in the middle, someone's going to have to take on.
Yeah, I think it's very interesting, Manos and Kartik. And I also know that you both touched on AI and agents in the beginning. So going a little sort of deep into it, Manos, to begin with, how is AI transforming the regulatory content, which is it structured, interpreted, and delivered to firms in a usable way?
Yeah, so it's very funny how in like the last just 3 years we've started saying AI and we just mean language models. I think you'll get my data scientist colleagues getting really, really upset about this because you know, they've been working on AI since it was basically, you know, machine learning as people knew it. And so in terms of like what's shifted, I mean, some things do not shift, right? You need information structures and you need content formats that are versatile because you need the same fundamental building blocks to serve multiple use cases. So that's one thing that is constant. But that takes us back to that question earlier on of rebalancing of competencies. So, you know, who in that relationship between vendor and regulated firm, or where within the firm, does the structuring and the interpretation happen, and how do you keep it kind of versatile? So like I said, you know, for a long time you had vendors who were better at building information structures that scaled well, and they would do the extra effort of mapping all of their stuff to the native structures within the firm. And that was fine for a while, but it was quite a rigid way to work. So, you know, and very often you couldn't get to a lot of granular detail because you had to have a solution that worked for everyone or for a lot of clients. And if you needed more granularity, you'd get like a special interest group or experts convened together to, you know, take it that step further with some authority. Or you'd have some vendors who take like one firm as a model and hope everyone else was broadly similar. And now what you're seeing is language models have made a lot easier for the firms themselves to work with their existing information structures as opposed to your vendors. And especially with really large firms, you know, they're going to have better experts in some cases. They're going to have way bigger cloud budgets and token budgets. I spoke earlier about MCPs, but, you know, MCP to MCP interfaces could one day mean that the firm and the vendor don't even have to learn each other's language. You can just get the bots to figure it out by themselves. Maybe science fiction. So you know, what you're left with is, you know, if you've got highly structured data, that's what normally is the most powerful driver. And we've even done some research on this that basically says if you've got small language models, cheaper to train on highly structured specialist data, they tend to outperform generic data thrown into generalist LLMs by many orders of magnitude in terms of cost, in terms of speed. So one thing I do see in the future is I see agentic AI kind of systems allowing firms to build what in the past would have been pretty clunky and high maintenance and static rules engines, and making them much more flexible, allowing them to accommodate more significant regulatory change so that they don't break when something changes about the business or around the rules. And, you know, you run compliance as kind of a platform in the real sense, not in the sense of like a platform onto which you load the data you want, you load the capabilities you want, you load the user interfaces that you want, and that's what you manage. So I'll stop there. We could go on forever, as you know, but I want to be a bit careful of everyone's time.
I think that's very interesting. And Kartik, on to you. I think you touched on the operations piece earlier on. But to sort of get a quick insight from you, what are the key risks, especially around trust and auditability that you're seeing with the use of AI and automation that's happening currently?
So before we move to the risks around trust and auditability, I think a significant shift that we are seeing from a operations point of view is moving from, you had previously case management where you had structured items that an analyst would pick up like top down, regardless of understanding the context of which one is a higher priority, how does it mean to the firm, etc. From there, we started shifting towards what we call as jobs to be done, where you have an agent that is then determining what is the most important thing that an analyst needs to be looking at. But from there, I think where the world is going to shift to is what we term as decisions to be done. Because ultimately, the vision that we are seeing is you will have agents that will be doing pretty much 99 of the jobs or these operational tasks, be it like sending out emails or sourcing documents or comparing those documents against your risk appetites, etc., or reaching out to customers. So a little bit of that relationship management will still remain with humans, but ultimately from a financial crime and compliance point of view, that 1% that will be left with humans is going to be the most critical 1%, which is the decision making. So the way we see it is agents pretty much bringing together all of the data that can then be presented in a coherent and a contextual way that the human analyst has the best possible understanding to make that decision. But this is where you have to figure out, how do you think about trust? Could you have an analyst completely trusting the agent to have sourced the right information? Because even today, when I'm playing with Claude Code and something fails, I ask Claude Code, why did you fail? It gives me an answer because it liked that answer. It said that, this particular MCP had a failure, but all it was an authorization token that had expired. So can we start to rely on agents so much? And back to Manos's point, how do you then go back to the regulator and say that, how did you arrive at that decision? What prompted your analyst to make that particular decision? So that is where I see the biggest risk and also the biggest opportunity. Manos touched upon something very interesting about small language models. That is where Complystream, that is the SLM we are building, because you will have so much richer information and decisions, primarily decisions being made by humans that then are capable of guiding agents to have the, how should I say, the intent and the capabilities to give to humans to make the best possible decisions. But then you have the second layer of auditability, that can you have the complete trust in how did that agent actually arrive at that recommendation or piecing together certain bits of data to give it to the analyst. So chaining, how should I call this? Chaining workflows together, but also having these harnesses. And these harnesses would come from systems like RegGenome, because you would have the policy and the procedures that is then completely baked in with the regulatory changes. And these harnesses are effectively safeguarding the decisions that are then, or the recommendations that are coming from agents, but also actively pushing the agents to not have goal drift. Because agent, at the end of the day, the way I see an agent, the agent is able to calculate and make decisions on the fly, rather than having a strictly, like you have 100 inputs and then you need to have 100 outputs. It is no longer that world we are living in. So that is where the risk and the opportunity to me are pretty much one and the same.
I can only confirm from our side of the world, there's nothing scarier than following up any kind of prompt and response with, now please validate. That just, everyone, I think, defaults to the same approach. We call this scaffolding. It's the same idea that essentially says, you need structured rules that tells you what context you should be bringing into things. You need another layer of structure on the other end that says, how do I even know that this was an answer that was in the spirit of what the user needed? And I think a lot of the reason why this is difficult is because people have in compliance or in the law have tacit knowledge around what is right. For example, people often say, in order to ask about the law, you have to know the law. It's a very similar thing. Bringing all of that tacit knowledge that an organization has into genuine instructions, when very often people don't even say these things out loud, that's a huge challenge. It takes a lot of time. And essentially, you have to learn to define tasks very differently. Sorry, I know I jumped in there, but it's really worth saying how much that answer resonated with us as well.
Yes, no, really appreciate it. Thank you for pitching in. So I think you've also sort of leaned in towards whenever we talk about automation and AI, we always talk about real-time insights and how that is shaping decision making. So Kartik, how close are we to achieving real-time operational compliance in areas like AML monitoring and investigations?
So I would say way closer than where we were 12 months ago, especially because we were up until 6 months ago or even 3 months ago, there was a lot of reliance that was placed on humans to capture not just the decisions they made, but also give a backdrop as to why they made that decision, only for that decision not to be fed back as a feedback loop into the thresholds that were set either for real-time transaction monitoring or for payment screening or even customer screening that has to be done both on an ad hoc basis and also on a periodic basis. But now the world that we are seeing is finally FCA that had been beating the drum about risk-based monitoring and doing it on a continuous basis. I think we are very close to that piece of fiction becoming reality now. And the reason that is happening is we have agents, AI agents, that are constantly tracking the flow that a human went through after an alert came up, be it on the transaction monitoring side, be it on the customer screening side, or any of these processes that require actively, like even fraud monitoring, etc. Rather than waiting for a human, the agent is then actively feeding that back into the rules engine and giving that as, posing that as a question, as an opinion. So I remember this quite vividly few jobs ago, actually. We had an extremely sharp head of compliance in the Financial Crime Intelligence Unit. His job was to look at all the transactions that were either stopped or that were let go and run a SQL on it, go into Snowflake, pull it all out, and then run a model, only to then come up with a confirmation that we should now change this rule 1 to 3 or something like that. That now becomes completely real time because you're no longer relying on humans to have special skills, where you can have agents deployed at scale to do this constantly and have opinions. So that's the shift we are seeing. And I think we are way more closer than where we were even 6 months ago.
That's, I think, a more of a positive sign. Thank you. Manos, so how close are we to truly real-time intelligence that reflects regulatory change as it happens across jurisdictions?
Yeah, so it's difficult to answer because in one sense we're very, very close. In another sense, we're super frustratingly far. And I'll explain what I mean. I don't mean this as a soundbite. So the technical reality is that you can capture content pretty much as it is published, either because under terms of a license, you are receiving kind of API access, or because you can build crawlers that look into different websites as things get updated. So that can be made quite fast. And we know from our own experience, like of our content pipeline, that you can take even tens of thousands of documents a day through a pipeline and enrich them with very many layers of in-depth metadata. So you can look at that technical reality and say, well, in that case, you can monitor regulatory change in real time. And so yes, if that's your definition, yes. And you can even get that over through an API to a client quickly. That's not a problem. Now, there are other things in the way between just capturing the content and mapping it to all the places where it needs to go. and actually getting it to flow through to compliance. First of all, a lot of compliance just doesn't work in the sense of rules engines ingesting data and producing compliant output on the other side. I'd say that's really the minority of content. Most things cannot be automated to that extent. Most of them can be automated to the extent that you can generate the key components of a policy, detect whether some of these need to be reviewed, provide areas of vulnerability and risk. But actually end-to-end processing of regulatory change is something that in most non-reporting related areas is pretty elusive. So I think the first time you probably get a strong enough signal that policies need amending in some way, which is often, a human eventually always comes into the loop. And there's a certain amount of this that you can't automate away because it's very hard and undesirable to automate away accountability. And I think that's where, if you think of behaviorally where all this comes down to, that's one of the reasons, by the way, why people use Excel so much still, because it really focuses ownership on someone who has to maintain, who has to confirm, who has to validate. So that's a part that we can't really get rid of yet. And part of the reason is we don't want to. Accountability is important in these kind of work. But if I can just zoom out of this, because we're also in the content business, I do want to say that a lot of the latency in all of this is also down to how regulators publish. And this may be a kind of hobby horse of mine, but it is one of those news items that don't get out there in the whole discussion about RegTech. So most regulators, the only way they can get their rules out there is on their website, which is genuinely primitive. Right. And I'm not saying the websites are bad as websites, but as a mode of content distribution for digital regulation is just completely inappropriate. Most of them don't even think like publishers. Most don't have licensing policies in place, for example. Most of them have never reviewed their terms of use in the last 20 years. Even now in the post-LLM world, even major regulators, they're more focused, let's say, on blocking OpenAI from crawling all of their stuff than building kind of industry-grade bulk content distribution platforms. And in a way, people like us benefit from this. So I'm not complaining about it that much because, as a generalist, it's very hard to build a generic web crawler and expect to get kind of global coverage. It would break. If you try to scrape daily with a generic kind of tool, it would break. Instead, we have the ability and the advantage to be able to work with major regulators to actually coach them in these things, help them build licenses, etc. And so in a way, this benefits us. But if you zoom out and you think, is this really how you walk the walk when you've said so much as a regulator about how much you want to help digitize compliance? It's not a great place to be. So I do want to leave you with that final thought that we can automate everything we want from the moment things are on documents and are on our side and available to download and process, but really think about how inefficient it is that ultimately the main source of regulatory content in the world is PDFs hanging off of websites. That really needs to change.
Wow, that's something to definitely think about. Thank you, Manos. So to quickly touch on the strategy and scaling bit, as RegTech solutions scale globally, what do you think are the biggest barriers? Would it be the fragmentation or the data standardization or system interoperability?
I'll pick on just one of the items because I know Manos already presented this fascinating piece around how the regulatory policies are presented by these regulators. It's quite shocking already, but I was also thinking as you were saying this is why can't they move into this world of MCP? Again, it's one of those things where we want to push for this change. I think for me, one of the biggest barriers I would say is data standardization. But with MCP, I think we get to a place where you no longer need to have data standardization and something that can then enable systems, regulators, and essentially counterparties talking to each other in a much more coherent and contextual way. But to build on this barrier that I see is what happens when you have a larger proportion of content, and content can be what customer documents are being prepared, what identity documents are being generated. When you have AI being primarily the source of this content generation. When AI exceeds what humans are producing, how do you then differentiate as to what is reality and what is not? I think for me, that is one of the biggest issues that a lot of people are not talking about, is what do you rely on and what do you not rely on? How do you differentiate between this is a fake ID versus this ID actually being a genuine one? So whilst we can do a lot of work around regulatory fragmentation, data standardization, and system operability, the issue is you have bad actors that also have the same, if not better, tools at their disposal. And we talk a lot about, in financial crime and compliance, about organized crimes. My fear is, does crime become more organized thanks to Gen AI? Does it become even more coordinated? And something that has frustrated me for time immemorial is we talk about data sharing, and we have only had very few jurisdictions, Singapore being one of them, that have actually done data sharing, but also not at scale. They've done this more as an experiment where you have these 6 major retail banks coming together to share information. But if you look at the UK, or you look at Europe or US for that matter, there is so much fragmentation, not just from a regulatory perspective, but also data perspective. But then I don't even know what's happening on the flip side, where you have this large scale crime being done in an organized way. Are they sharing information? For example, are they sharing information about these vulnerable elders, especially, who can then be easily trapped by fraudsters? Are they sharing that information? And, something that shocked me, but not anymore, few weeks or months ago, I came across this documentary where in Nigeria, you have online courses where you have experienced fraudsters who are actually teaching wannabe fraudsters at a proper fee and everything as to how do you defraud people. Is that the tip of the iceberg?
Oh wow, that is something to definitely think about. And I think it's naturally blends on to the next question. So what can the ecosystem do about this? Does that help if you integrate better with the ecosystem with regards to the regulators, financial institutions, and other RegTech providers to also help achieve the scale and impact? What do you guys feel about it?
Yeah, I'll come in. I mean, first of all, and I'll just take a cue from Kartik's prioritization of things, of standardization versus, I guess, harmonization of rules. I don't mean to be cynical, but obviously, as a RegTech industry, the fact that the rules are fragmented is kind of what you make your money on. I hope it's clear. But things can be fragmented in different ways. They can have a similar underlying logic, but be different in their expression. That's the most benign scenario for RegTechs, because you know how to build things. You just need to plug in the right parameters in each case. You can have situations where there's real incompatibility, and that's a matter of policy decision. So, for example, things like data localization can get in the way of making things work. And it doesn't matter how clever your tech is, right? And so, that's why the standardization point is so much more important. Like if you have fragmented rules, but standardized inputs and outputs, for the industry, that's definitely a good thing, because you got all the extra boost to demand from the fact that there's potentially frictions to be got rid of, but none of the headwinds of having fundamentally incompatible frameworks. Now, in terms of standardization, I did want to dig into Kartik's point earlier to say that, if you just fundamentally don't have the data and it can't flow, it doesn't matter what the standards are. Like if you can't share intelligence in certain ways or about certain things, you can't standardize that away. So having made those caveats, both of us, I think then the final point is that a lot of compliance doesn't work the way let's say reporting does, or even things like suspicious activity reporting in the AML space, where there is a bit of a top-down standard, or where the economic need is so strong that firms have really rushed to create kind of common solutions, even where regulators have not mandated them. For most of industry, you will not have these maintained, versioned taxonomies and information structures and controlled vocabularies. Like regulators won't think of these things as IP that the industry is supposed to own collectively. And so when you look at things like conduct issues of all kinds, just even classifying conduct issues is not something that you could harmonize right now. And so my contribution to this, I think, is to say that there are very big gaps in the what we are able to discuss as information structures in this industry. We have done well where the data already comes a little bit pre-standardized and where the stakes are so high that everyone has invested massively in getting the data right. And there are gaps in almost everything else. And conduct more generally, with the exception of market abuse, is the epicenter of this kind of issue.
Thank you, Manos. So, yeah, I think we're coming to a close now, and I'm very conscious of time, but we always have a sort of future piece in our content to see what speakers think about the future. And today we're discussing RegTech. So, looking ahead 5 to 10 years, what do you both think will define the next phase of RegTech evolution?
Thank you. It's been a thoroughly insightful and learning conversation so far. And Manos, I do want to come back to you offline. There are a few things that you said I want to pick your brain on. Very exciting. The two things I'll think of from the next 5 years, for example. We're shifting to this place, like I started this conversation around decisions to be done, where you're preparing everything for the analyst to get to a place where they have everything at their disposal to make that decision. But what comes next after that? And something that is fascinating is human oversight at machine speed. So we have been talking about the fact that human in the loop is critical, that needs to be absolutely implemented in financial services, and especially where there is a heavy regulatory and social impact that is possible. But I want to question that and say that when we talk about human in the loop, and we have agents, and especially agents on the other side, where you have organized crime agents that are actually operating at this machine speed, would we be in the scenario that a human oversight, where you have a human making a decision at the end of it, is that even capable to stop fraud and financial crime happening at agentic speed? So we need to rethink this complete paradigm where we talk about human in the loop. Yes, we can have human in the loop, but there is a reason we are building agents. And again, people talk badly about, or at least in a bad light, about AGI and then ASI. But what if you have AGI/ASI operating at this machine scale, but enabling this oversight that you completely can trust? Because end of the day, we have large scale organizations that are making these cuts, like Oracle announcing 21,000 jobs being lost, Meta announcing nearly 10,000 or 10% of the workforce being gone. When we are saying that we are actually okay to do certain things without humans, why can't we think of this paradigm where we have actually agents making these decisions, but us being comfortable? And how would we get comfortable is the question that we should ask. We should not default to the paradigm that is always going to be human oversight and human in the loop. The question also to be asked is, can we actually stop the proliferation of financial crime that is happening at agentic speed by keeping human in the loop?
I'm quite impressed because once again, I think Kartik, because of his specific vantage point, he can put into very practical terms some of the things that on our side we sometimes think in vague terms. But one thing that really jumped out at me in all of this is when you automate things, you have to understand what things can and cannot be automated. And or at least what things you haven't managed to automate currently, but might have to in the future. And one of the things that you can't currently automate is accountability and liability. And it's not that the machine will not do it. It's that when you try to automate these things, you can't remove accountability and you can't remove liability and you can't predict where it's going to land, right? And so you've got a task in front of us in the next 5-10 years of saying, what does it mean to have people be accountable for compliance outcomes in this world? Like, trivially, you can say who pushed the button, right? But no one's pushing buttons right now. So if no one's there to push the button, who is accountable for outcomes? And so I don't think we've got good answers here yet, or at least I don't know of them. So that I think you touch on such an important point, Kartik. We could spend a whole day on this. I think the other part is to just think about the kind of macro trends. And here I'm going to disappoint you by saying, like, I really don't know how things will play out. But this industry kind of rode a really big wave in the 2010s of, massive regulation, massive amounts of standardization, a lot of VC funding. And so it took on the shape that it has now. And you can read lots of analyses online that say, well, there's going to be more consolidation. There's not going to be as much money. There's going to be more fragmentation. These things will change the shape of the industry. I think that's important to watch. I can only say that we're probably not the kind of people to go to get analysis on the geopolitics of regulation and how they're going to play out. But it is important to understand that the sector looks like it does right now because it rode that very favorable wave of influences. And now that, firms have become established, vendors have become quite large and have developed good ways of working with firms, that's not all going to go away, but it will change. Like, the barriers to entry will be different. The shape of the industry will be different. So the fundamental economics of it will start bearing on the shape of the industry in the next few years.
Thank you. And I think that's it for this episode. I thought the conversation was very, very insightful. Thank you, Kartik. Thank you, Manos, for your contribution. And there's definitely a lot to take away and go and think about. So I really had good fun with this conversation. Thank you for your time. And thank you, listeners, for tuning in. We'll be back with another episode.